hear out from Swami sir also on the whole tariff and what he currently makes of this entire 90-day window, which in a sense has come from Donald Trump. Swami sir.
Yes. Hi.
90 days more.
Sir, at this point, what can we say? Financial meltdown has been averted, but the trade wars are very much on. There is a 25% duty on auto, steel, aluminium, and probably pharmaceuticals to come, 10% on everything else, 145 on China's thing. So I would say financial meltdown has been averted because the bond market made it impossible for Trump to continue. But US recession, I would say overwhelming chances there is going to be US recession. China, with this particular hit, it is going to be the effect of virtually a recession, even if it doesn't actually become negative in terms of GDP growth. The two biggest economies on the world are both going to be pulled down. Over and above that, there is the complete uncertainty of we never know what Mr. Trump is going to do next week or the next day or even the next hour. This uncertainty getting baked into everything else means that everyone will just say, go for safety. We would not expect stocks to do very well in this particular period. There was a danger at one point, I think, with the financial meltdown, that even US gilts and the dollar might have gone for a 6. That has been averted. But nevertheless, if you are going to have a major slowdown, both in the USA and in China, all of us are going to be hit. And this, frankly, is a much, much bigger impact on India than any talk about the bilateral tariffs. Bilateral tariffs, you have no idea anymore because the word reciprocity no longer has any meaning, it would seem to be. It would seem that Mr. Trump wants to put a tariff on anybody who has a trade surplus with the USA. And how much, completely uncertain. There was some bogus formula which will hopefully be changed. But all I can say is uncertainty, major slowdown, not a good outlook for equities.
Swami, how do you think the situation with China is going to actually evolve? Because right now, China is facing a 145% tariff, right? And it's almost like both countries are just flexing their muscles, while Trump has said that there will be a call with Xi Jinping at some point.
This is like, I don't know, this is like trying to show your muscle because they look very foolish on having to withdraw the so-called reciprocal tariffs on everybody else to try and still show, no, I'm a great king of the jungle. They went ahead and increased this tariff. And Mr. Scott Bessent, Treasury Secretary, tried to pretend on TV, people who threatened to retaliate, we've shown them what the USA can do. And others who didn't retaliate, who were willing to negotiate. And that was our game plan all the time. Now, that is nonsense. The market knows it. Everybody knows it's nonsense. But the point is that he has still made things worse. There is no financial meltdown, I do agree. And that is better than having a meltdown. Nevertheless, trade wars have begun. If you have these high 25% on so many items, 10% on so many items, 145 on China, please let us be clear, a trade war has begun. We are not sure how long, we are not sure how deep it is going to hit world GDP, but it is a dark outlook. It is not a happy situation, even if it is not as bad as a meltdown.
Now, whatever is happening in China, Swami sir, India in a sense is in a different positioning. Let me be a compulsive bull here. Can I say that? Because tariffs will not be that large. If China loses, India gains. Manufacturing is certainly going to be moving to other parts of the world. So maybe this is something in hindsight we could say is China's losses, India's gain?
There can be some crumbs that fall into our table. We have to look at the magnitudes. China is a huge, fantastic manufacturing power for the whole world. It has been the factory of the world now for some years. So yes, India may pick up a little bit here and a little bit there. That, I regret to say, will be more than offset by two things. One is the global slowdown that's coming. The other is Mr. Trump's wanting to see everybody shrink their trade deficit with the USA. So let us see how this thing goes. So as I said, India may not be the worst hit. China is unquestionably the worst hit. But beyond that, let us see. I mean, India is a significant exporter of things like steel, aluminium, cars, not so much to the USA, pharmaceutical, yes. All of these are open to a 25% tariff. So yes, India may pick up something on textiles, India may pick up something on some of the other items, yes. But overall, we are definitely going to be losers with these high tariffs on so many important things. But all of this will go into the shade compared with the slowdown being imposed on the world by the huge fall in the two largest economies in the world. So that is the biggest minus for India. It's not a bilateral matter. It is the whole pie is going to shrink. And to that extent, whatever India's share is, even if it increases slightly, it means that we are down to.
What do you think the bond yields are indicating? You've got the DXY, which is currently below 100. It's the highest weekly spark that we've seen in the yields in about, I think, last 20 years. What are the bond markets factoring in?
No, what's very clear is that Mr. Trump, like Liz Truss in the US, in the UK before, she thought she could do various things and the market would bear with her. But no, when they looked at what her deficits were going to be and they said, no, they probably increased the interest rates, the yield, so the treasuries themselves fell and she had to reverse. Something similar has followed. It's not exactly similar because the US Treasury was supposed to be the anchor of the world's financial system. There was supposed to be nothing more solid. So even if there was going to be a world recession, even if there was going to be things going downhill, the assumption was that there would be a movement of money towards the safest of all things, which would be US gilts. But when even the safest of all things, US gilts began to fall, they said, my God, we are now in for a financial meltdown. This is not just a recession. This is something much worse than a recession, where the most fundamental building block of the entire bond system, and please remember, bond markets are much, much bigger than equity markets. And the fundamental building block of the global bond market is the US gilt. If that was going to go, the uncertainty and the possibilities of meltdown were enormous. So we've been, I said, that is what even Mr. Trump could not stand up to. So it's a good lesson for us all that, thank God there is some force that can even check Mr. Trump. Going forward, I would simply say that remember that the trade wars are not over. There is a saying of Winston Churchill, if you remember. He said, this is not the end. It is not even the beginning of the end. It is just the end of the beginning. I would say that is where we are in the trade wars. And these ups and downs and different kinds of tariffs and different kinds of negotiations are going to continue for the next 2 years. Do not expect Mr. Trump to give up on his great idea of putting up tariffs in order to attract investment back to the USA. He has promised it to his people one way or the other. He will try to deliver. He was not able to do it overnight. He will keep trying over the next 2 years. So he will not do anything as dramatic as to cause a financial meltdown. That we have learned. But anything short of that, will he keep trying from time to time? And I would say, unfortunately, yes.
Okay. All right, Swami sir. Always a pleasure and a delight to have you in ET Now. Thank you for joining us.
Thank you.
If you like this video, then like, share and subscribe to ET Now.